Hello and welcome to the webinar UK Attitudes to Corporate Tax, a Decade of Data. In this webinar, the Fair Tax Foundation will present its findings from its latest survey covering how much fair tax matters to the UK public. I'm Glyn Fullilove. I will be chairing the session. I spent 20 years as the head of tax for various large multinational corporations. I'm a past president, a former president of the Chartered Institute of Taxation, and I now work for Krona, where, amongst other things, I am the editor-in-chief of the magazine Tax Weekly. I will introduce our other panelists as we go along. We will be having a question and answer session after the presentation and a response by Unity Bank. So please use the Q&A technology in the Zoom function, the Zoom webinar, to ask your questions as you go along, and we'll pick them up at the end of the session. Now, first we are going to have a poll, and so I'd ask that will come up. Great. So, as you are voting in this poll, I'm going to introduce our next speaker and pass on to her. Natasha Turner is a freelance research and communications consultant for non-profit organizations. She's worked with the Fair Tax Foundation since 2024, and prior to that, she spent nearly a decade in financial journalism, specializing in women's economic empowerment and sustainable finance. Her last editorial role was as global editor for ESG Clarity, which is now PA Future. She has an MA in magazine journalism from the City University in London, and I'll pass over to Natasha now.
Thank you very much, Glyn, and happy Fair Tax Week, everyone. I hope you can see the slides there. I am indeed going to be sharing the results from the report that's out today, looking at a decade of public attitudes to tax in the UK. And I'm very interested to see what the poll's going to show before I get into those results. But just before I do that, I'll just introduce the Fair Tax Foundation. So the Fair Tax Foundation is a not-for-profit social enterprise. It was created in 2014, so it's been operating more than a decade now. And it developed the world's first responsible corporate tax certification scheme, the Fair Tax Mark. So the Fair Tax Mark is a label for responsible businesses, a bit like fair trade, something like that. And there are a variety of standards of which a business can be assessed on, by which I mean businesses of all kind of sizes can get the mark. And currently there are more than 275 businesses in 8 countries that do have the mark. If you're interested in those standards, the different standards that apply to different types of businesses, the Fair Tax Foundation is actually launching a new standard this week in Fair Tax Week on Thursday. And there's a webinar about that, which can be shared at the end. The Fair Tax Foundation has also developed some other initiatives. So they've got the Tax Responsibility and Transparency Index, which is a benchmark for multinationals. They work with investors and asset managers looking at tax conduct at their investee companies. And they also have an initiative called UK Councils for Fair Tax, which I might touch on a bit later. Oh, sorry, I think I'm on the wrong slide. Well, there you go. So what do the Fair Tax Foundation actually mean by fair tax? Probably something worth covering because I'm going to be saying fair tax a lot. So for them, it means operating within the spirit of tax laws rather than the letter of the law. So, you know, not being overly aggressive, not trying to exploit unintended loopholes, things like that. It's declaring profits and paying taxes in places of economic substance that actually reflects value, and just being proactive and responsible around tax uncertainties and really transparent. And transparency is going to come up a lot, I think. So this is just an example of some of those businesses that are certified. And as I said, it's sort of a variety of shapes and sizes in 8 countries. So before we go on to the report, which is out today and called Strong and Sustained, a Decade of Public Support for Responsible Corporate Tax Conduct in the UK, just going to go back to this poll question and see what people said. And it looks like actually people were basically spot on. Most people have said 3/4 would support fair tax businesses, and that is what the data shows pretty broadly across the mark, and also across a decade, basically. Probably because you've all been reading it year on year, I'm sure. So this report that's out today, it marks 10 years of this polling data. And part one of the report looks at 10 years of polling data attitudes towards businesses. So it's, whether you would shop at, work at, support a fair tax business. But over the past few years, the Fair Tax Foundation has also been asking questions to the public about tax policy and about what the UK government could or should be doing in some of these areas around fair tax for businesses. But in both of these areas, the support is in all the years that these questions have been asked, the support has been sustained and high, and it's across regions in the UK, it's across political persuasions, and it's across genders. There is an increase in support for pretty much across the board with age, and also there is some difference in the social group demographics that the polling company uses. So that's kind of some notable points that are brought out in the report. But I've just put some of the highlights up here for you today. So as you've already all guessed, people are very supportive of the idea of shopping at a business that can prove that it's paying its fair share of tax. So across a decade, 73%, so nearly 3/4. Similarly, people would prefer to work for a company that pays its fair share of tax. And we know that from the businesses that are accredited, because it's sort of one of the major reasons that businesses see the fair tax mark is for that employee pride. But also there's increasing research into this area showing kind of this shift between attitudes to actual behaviours. There was a couple of studies last year showing that people would actually not recommend or be less likely to recommend a business if they were a job seeker that was being very aggressive with their tax practices. So this is actually kind of really being shown to influence behaviours as well as attitudes. I think that can be seen then in a question about switching to a business. So this question is whether people would, if presented with an equivalent business for the service that they or the product that they were after, switch to a business that could prove that it's paying its fair share of tax over one that wasn't. And more than half of people would do that. I think over the decade, this probably ties in quite well with the growth of the ethical consumer movement that we've seen. And again, this kind of rising research and studies into sort of behaviours being influenced. As it's Fair Tax Week, which is a week to celebrate businesses doing the right thing around tax, we ask whether a business doing the right thing should be celebrated. And again, it's high, 72% over the decade. Interestingly, when people think about what concerns them in terms of a business, and they think about wages and ethical practices and things like that, wages is always a very high concern, but tax is consistently second, actually. And so that's and again, that's over a decade, and that's very interesting to see. I think trust is a very important element. It's an important element of the fair tax mark, which of course is an independent verification. It's awarded by a non-profit, and so it's a very kind of trusted stamp of approval, as it were. But it's trust is something that's clearly very important to the UK public. I mean, we've just seen the King announce recently that he's going to publish some of his personal taxes. So that piece around trust and transparency is clearly very important. And I think we can see that in this polling as well. Interestingly, the Fair Tax Foundation did a report on this in 2023 as well, also supported by Unity Trust Bank. And at that time, it looked at trust in some other organisations such as HMRC and some other authorities on tax. And it's interesting to see that this time, a couple of years on, that trust has really bounced back. And there's a couple of things that have happened in that time that the report goes into, and things that the Fair Tax Foundation have been supportive of. So then, as I mentioned, sort of the second part of the report looks at attitudes towards some policies or towards some things that maybe the government should be doing. And one of those is whether tax or how much responsible tax should be considered in procurement decisions. Yeah, sort of alongside value for money, or even, regardless of value for money. And it's an interesting time because the Procurement Act has come into force in the UK. And I mentioned that initiative, the UK Councils for Fair Tax. There are more than, I think, 63, 64 councils signed up to that, which means that they lead by example with their tax practices, but also they push for responsible tax consideration. And those councils, they're collectively spending £28 billion on procurement, and a quarter are now incorporating fair tax into social value. So I think we've seen since that act has come out as well that there's just a greater push towards including tax into that social value piece. And then the focus of the Fair Tax Foundation is corporate income tax, and they're often asked why that is. And there's a lot of reasons for that on the website that you can see. But I mean, essentially, it's because of the positive impact it can have. I mean, it's not just a revenue raiser for public services, it's also crucial for business competition, improve national productivity, reduce inequality. But saying that, over the past couple of years, the Fair Tax Foundation has asked the UK public about other taxes, and one of them is a digital services tax. And this is a tax on revenues of multinational tech companies that provide UK users with certain digital services, so search engines, social media, online marketplaces, that kind of thing. And a sort of interim tax was introduced in 2020 at 2% on some of these. And so the Fair Tax Foundation has sort of asked the public their thoughts on this. And over the past 2 years, yeah, it's sort of more than half agree that this should be something that the UK is doing. I'm just going to go back because I think I've skipped one. There we go. Okay, so more attitudes on policy. So again, a very high number of people think that companies should be disclosing a tax policy. And so this is actually a key criteria of the Fair Tax Mark. And it's something that Fair Tax Mark businesses do and have been doing a very long time. And at the bare minimum, a tax policy should seek legal compliance, set out a business's approach to governance, internal control, and risk management. A fair tax business would also be expected to explicitly shun tax avoidance and the artificial use of tax havens, and commit to a declaration of profits in the place where their economic substance arises. Another policy that the Fair Tax Foundation has been pushing for a very long time is public reporting of where profits and losses are had. So this applies to businesses that are operating in more than one country. If you're more interested in that, there's actually a webinar this afternoon, 3 p.m, specifically on public country-by-country reporting. But you can see here that the UK public agree that the UK should be leading on this. They should be leading on asking multinationals to be very transparent, publicly state where their profits are earned and where their taxes are paid. Similarly, the UK public think businesses should disclose what taxes they do or don't pay in this country, regardless of the size of that business. At the moment, there are some size dependencies and sort of structure that means that certain businesses do or don't report that. And then finally, the statement is asked in the polling to agree or disagree with whether all businesses benefiting from government bailouts should have to agree to a set of conditions that prohibit tax avoidance and enforce responsible tax conduct. And this year, that was 82% in agreement, which is the highest since 2020 when the first question was asked, and is, shows really, really strong support. In fact, in general, I think this year all the support has been, slightly higher than the averages, which is really encouraging to see. I'm just going to skip over this again. So yeah, as I mentioned, that report is out today. It's on the Fair Tax Foundation's website. It's called Strong and Sustained: A Decade of Public Support for Responsible Tax Conduct in the UK. Very grateful to be supported by Unity Trust Bank with this. There'll be a link later and also a link to some of the other events happening for Fair Tax Week. So thank you very much for whizzing through some of those stats, and I'll pass back over to Glyn.
Thank you very much, Natasha. Before we hand over to Penny, I just want to pick up on one of the points you covered there, and that's related to digital services taxes. I've been following the debate on base erosion, profit shifting, multinational tax avoidance, and so on for about 15 years at least now. And I think in that time, two things have been constant. One is pretty much a broad agreement that the international tax system is not well adapted to taxing highly digitalized businesses. And the other is that where there are loopholes, those highly digitalized businesses are extremely adept at using them. Now, attempts to change the system seem to have stalled, failed with I'm sure many of our watchers will be aware of the failure or the seeming failure of Pillar 1 of the OECD's program. And although I think it's fair to say that a lot of loopholes have been closed over the last 15 years, there are still some around, and arguably big tech has been able to apply political pressure in the US to keep some of those open. So our digital services taxes, which have been seen as really temporary features of the tax system, would you say, or would the Fair Tax Foundation say, it's really now time to make them a permanent feature, and perhaps look at the UK, who's been, set the rate slightly lower than other countries, 2% compared to sort of 3% where it is elsewhere. So is it time maybe for the UK to say, no, these are now a permanent feature of the system and we're going to have a rate of 3%?
So I think the Fair Tax Foundation would certainly say that the sector is currently undertaxed, and for some of the reasons you point out, and also some of the other initiatives that are in place for other sectors. And I think, as you mentioned as well, in the absence of Pillar 1, or in the sort of failure of Pillar 1, perhaps, absolutely yes. But I think, it has to be kind of considered in the round and taken in that context of the kind of moving parts of other tax systems.
Okay, thank you. A very balanced response. So we're now going to move on to a response to the report from Unity Bank PLC and from their Chief Financial Officer, Penny Hogan. Unity Trust Bank PLC is one of the longest standing Fair Tax Mark certified organizations. And Penny, as their CFO, oversees finance and treasury and a number of other areas at the bank. She's a strong advocate for fair customer outcomes and has led significant initiatives to embed fair pricing and operational resilience throughout the bank. And her career spans over 2 decades in financial services, including senior roles at the Cooperative Bank and at Deloitte. So over to you, Penny.
Thank you, Glenn. Good afternoon, everybody. It is a pleasure today to speak about something that sits at the very heart of who we are as a bank. Our commitment to paying the right amount of tax in the right place and at the right time, and why our fair tax accreditation is not just a badge, but a profound expression of our purpose. At Unity Trust Bank, we exist to create a better society, not as a slogan, but as a guiding principle embedded in every decision we make. And as CFO, I'm very clear about how we approach tax is one of the most tangible and impactful ways we contribute to that purpose. But let me start with a broader context. Tax is one of the fundamental building blocks of a functioning, fair and prosperous society. And in the UK, tax revenues fund the public services we all rely on: our NHS, our education system, our infrastructure, our security, and the social safety nets that support the most vulnerable. Every pound of tax contributes to outcomes that go far beyond the balance sheet. It supports nurses and teachers. It funds roads, transport and digital infrastructure that enable economic growth. It underpins community resilience and social mobility. And critically, it allows government to respond to national challenges, whether that be economic shocks, public health crises, or the transition to a more sustainable future. In short, tax is not simply a cost of doing business, it's a direct investment in society. This view aligns directly with Unity's purpose: to create a better society by responsibly delivering financial services that has a positive economic, social and environmental impact. We are a values-driven bank. Our customers, many of whom are charities, social enterprises and public sector organisations, exist to deliver positive societal outcomes. It would be fundamentally inconsistent for us to serve those organisations while taking a different approach to our own contribution to society through tax. Instead, we believe in full alignment. We support communities through our lending and services, and we support society through the taxes that we pay. Both are essential and both are deliberate. Paying tax responsibly is therefore not a compliance exercise, it's an extension of our mission. This brings me to the Fair Tax Mark. The Fair Tax Mark is the UK's gold standard for responsible tax conduct. It's an independent accreditation that recognises businesses which demonstrate transparency, integrity and fairness in the tax practices. It assesses organisations not just on what they pay, but how they approach tax, looking at governance, transparency, avoidance of aggressive tax planning, and a clear alignment between economic activity and tax contribution. Crucially, it sends a strong signal to stakeholders, customers, investors, regulators and colleagues, that the organisation is committed to playing its part in society. I'm particularly proud to say that Unity Trust Bank was the first bank to be accredited with a Fair Tax Mark. That was not an accident, it was a conscious decision to lead. We recognised early on that responsible tax conduct is integral to ethical banking. We chose to be transparent about our tax affairs, to adopt a robust governance, ensure that our tax strategy reflects both the letter and the spirit of the law. Being first matters, but maintaining that standard matters even more. Each year we undergo an assessment, and each year we reaffirm our commitment to fair tax practices. This is not a one-off achievement, it's an ongoing discipline. And let me touch on why it matters, both inside and outside the bank. Our customers increasingly expect more from financial institutions. They want to know that their banking partner operates with integrity, not just in what it does, but how it behaves. For many of Unity's customers, particularly in the social sector, alignment of values is critical. Our Fair Tax accreditation provides assurance that we share their commitment to fairness, transparency, and societal contribution. For investors and regulators, responsible tax conduct is an indicator of strong governance and risk management. Aggressive tax strategies can create reputational, legal, and financial risks. By contrast, a conservative, transparent approach supports long-term state sustainability. At Unity, our approach to tax is consistent with our broader risk appetite: prudent, responsible, and aligned to long-term value creation. For our colleagues, it's a source of pride. People want to work for organisations that do the right thing. Knowing that the bank contributes fairly to society through tax as well as through its core activities, reinforces engagement and strengthens our culture. So what does this mean in practice? At Unity, our approach to tax is built on a number of clear principles. Transparency, we are open about our tax strategy and our tax payments. Integrity, we do not engage in artificial or aggressive tax avoidance schemes. Alignment, we ensure that taxes are paid when economic activity genuinely occurs. Governance, our tax approach is subject to robust internal oversight, including board-level accountability. And compliance with spirit and letter. We comply not just with the technical requirements of the law, but with its intended purpose. These principles are embedded in our tax strategy and our day-to-day decision making. It's worth stepping back and recognising that tax transparency is becoming an increasingly important part of the broader ESG agenda. Environmental, social and governance considerations are reshaping expectations placed on banks. Whilst the environmental impacts often take centre stage, tax sits firmly within the social and governance pillars. Social, because it directly contributes to the well-being of communities, and governance, because it reflects how responsibly an organisation is managed. At Unity, we see Fair Tax Mark accreditation as a natural extension of our ESG commitments. It sits alongside responsible lending, ethical governance, and our work to support underserved communities. If more organisations adopt this approach, the collective impact is significant. Greater transparency builds trust in the corporate sector. Responsible tax behaviour helps ensure that public finances are supported in a sustainable way. And importantly, it helps level the playing field, ensuring that business compete on the basis of innovation, service and value, rather than their ability to minimise tax. As a bank, we have a role to play, not just in our own behaviour, but setting expectations across the sector. Looking ahead, our commitment remains clear. We'll continue to uphold the highest standards of transparency and integrity in our tax affairs. We'll continue to maintain our Fair Tax Mark accreditation. We'll continue to embed responsible tax principles into our decision making and continue to demonstrate through actions rather than words what it means to be a values-driven bank. And let me close with a simple reflection. At Unity Trust Bank, we believe that where your money goes matters. Who you bank with matters. That applies to the loans we make, the customers we serve, and the impact we create. But this also applies to the taxes we pay. Every pound of tax we contribute is part of something bigger. It is part of building the society we want to live in, a society that is fairer, more inclusive and more resilient. Being the first bank to achieve the Fair Tax Mark was an important milestone. But more importantly, it is a reflection of who we are. A bank that does business responsibly, a bank that aligns profit with purpose, and a bank that is proud to play its full part in society. Thank you.
Thank you very much, Penny. Penny. Not sure where that came from. Thank you very much, Penny. I can actually see we've got a couple of questions coming in, and the first one I think is definitely one for you to pick up. Given your enthusiasm for the Fair Tax Mark, which I hope is being passed on to businesses that are watching, they may well be asking now, well, how onerous is the process to become Fair Tax Mark accredited?
Okay, thanks, Glenn. I'll take this one then. So Unity has been accredited for a number of years, and what I see on an ongoing basis, and from my understanding from the original application process, is that it was certainly very, very clear, very structured, and very transparent in terms of what the process to undertake was. There are various different planning calls. The onus is on information that is publicly available or already available for the Fair Tax Foundation team that can go and directly access, but also being clear in terms of what the additional materials and assets to be shared as part of that process. The outcome of that process is a report, and it's really very clear. There's a scoring system, and it's clear in terms of each individual area how well or not it performed in each area, and equally how you can improve year on year. So overall, it was a very structured and clear and transparent process. And each year we go through the accreditation process now. It is a really slick process. It's part of normal operating activities at Unity, and the Fair Tax Foundation team do really go that extra mile to make the whole process as easy as possible.
So nothing to be scared of if you're thinking of doing it, and given some of the processes large multinationals have to go through for HMRC and others, it sounds like this is a relatively straightforward would be a relatively straightforward addition. If I can come back to, well, Natasha, do you want to add anything to that?
Well, it just as you mentioned there about kind of other requirements from other standards or whatever, it made me think that yeah, I mean the fair tax mark as well is aligned with GRI 207 and some of the OECD standards. So there's not it's not there to add a load of extra burden. It's there to just help, build that robust system and achieve that excellence. Basically, that's what I was going to add.
Okay, thank you. We do have another question that's come in. I've got one or two which I'll ask in a moment if no more come in. But the other one that's come in is really in the report, you talk about expanding some of the requirements for transparency to smaller businesses. Whereas, to the extent we've got transparency legislation in the UK, it's very much focused on large businesses. But how would you actually envisage small and micro businesses making the disclosures you contemplate?
Yeah, I mean, it's a good question. And again, it's that balance, isn't it, between the kind of the onerous business of compliance and all the sort of thing, especially for very stretched small businesses. But the fair tax mark, those standards I mentioned, there's a different standard. There's a couple of different standards that apply to different size of businesses or structures. So there's already one sort of available that recognises the differences, but also has been advocating for greater transparency in terms of kind of profits made and taxes paid for small and micro businesses from the start. And I think with the number that have already accredited, hopefully shows that it's not too much of an additional burden for those small businesses. I think a kind of a tax statement is something that the team at the Fair Tax Foundation can help a small business put together and publish, that helps with that transparency piece. So yeah, and I think also it's worth mentioning the importance of this, because we know it's not just large businesses that are engaged in avoidant or aggressive behaviours sometimes. There's a real number of small businesses as well, and the Fair Tax Foundation do have some quite a lot of research and writing on that on their website about the kind of the issue with small business avoidance as well. So hopefully that kind of answers your question. I think if a small business is interested but is worried about a kind of additional burden, have a look at the standard that's kind of specifically for them, and get in touch.
Okay, thank you. I guess we have another question. 68 local authorities have signed up as fair tax councils, but only a quarter of that figure had included the issue of fair tax as part of social value. Is that correct? So that's
So yeah, sorry, that is a bit confusing. I think there's a difference there between, so the declaration has a number of declarations, I guess, that the council sign up to, such as kind of pushing for fair tax and leading by example and things like this. But in the kind of new focus on social value from the Procurement Act, and some authorities are producing kind of new social value documents. That's where the difference is there, I believe.
Okay, thank you. I hope that answers the question. So I'll throw in one of my own. Country by country reporting. It's something that the Fair Tax Foundation has been very keen on for quite a long time. Why do you think it would be valuable now for all groups to be involved in country by country reporting, well, to publish country by country reporting? I mean, large groups are required to produce the data and provide it to tax authorities. So, what additional benefit is there from making it public?
Well, firstly, I would say for the real experts in country by country reporting, you'll have to go to the 3 p.m. webinar today for Tax Foundation. But the benefit, I mean, we've seen that transparency does actually lead to improved behaviours. So where there is transparency, you're often also finding the more responsible behaviours. When there isn't, often, there can be irresponsible. So I think that's, hopefully the short answer to your question, which is why it's so important that it is public.
Penny, would you have anything to add on
that? At Unity, our country by country reporting is quite straightforward because we only operate in the UK. For clarity, I also sit as a non-executive director on the Fair Tax Foundation's board as well. And I absolutely advocate the publication of the reporting in the interests of transparency and fairness for all.
Okay. And I have to say for a long time I was a little bit skeptical myself, because I felt that if it was imposed on UK companies only, well, not UK and European companies only, and not so much on US companies, they were sort of opening themselves up for lots of questions where you weren't seeing it imposed on others. I think that the tipping point may have been reached in that actually UK and European headquartered companies now probably in a much stronger position in terms of their fair tax generally, whether or not they've got the fair tax mark, and it would actually be a differentiator against some of the other companies. But we shall see. Natasha, you're nodding there.
Well, no, just that because you mentioned opening yourself up to questions. I think one of the things that the Fair Tax Mark team are really good at is working with companies to build a narrative around that report, so that you can really explain those numbers, right? And again, Greg later on today will I'm sure talk through some examples of really some leading edge reports that do include that narrative around those numbers as well. And then when those questions come, it's all there.
Okay, we've had another couple of questions in. So support for digital services tax. So that's a recent question you've added to the data request or the survey. Have any other questions been introduced recently across the 10 years that you've been surveying the data?
There was another question introduced this year around cryptocurrencies and how they should be taxed. I think the support for that question was 62%. The actual wording of the question escapes me right now, so I'll have to email you, Rob, with that one.
Okay. And right, how would you treat a business headquartered in the UK that appears to pay a fair tax, but its key shareholders are headquartered in offshore jurisdictions? Could that company still qualify for a fair tax mark? And this is a real example, apparently. So,
Cornwall, where I've just moved from. So you'll need to talk to our technical team, of which I am not. However, the fair tax mark is assessed at the group level. So if there was a business in the UK, it wouldn't, you couldn't qualify just for that business if you were also operating elsewhere. That's not really what you're asking, though. Again, I think in offshore jurisdictions, I mean, again, if you can show economic value and taxes paid on that, probably fine. But yeah, unfortunately, I'm afraid you're going to have to go talk to our technical assessment team about the details there.
Penny, any thoughts on that question?
Yeah, I think the answer is it depends. Offshore jurisdictions. What do we mean by offshore jurisdictions? There's the good, the bad, and the ugly. In that pot. So it's definitely a question for the technical team.
Yeah, because you could certainly be paying all of the tax that's due in the UK, and we do have a system that if once a dividend has been paid out of the UK, as far as the UK net is concerned, that's the end. There is no, it's up to the jurisdiction to which it's paid to levy tax or not. So it's a tricky one. I can see it's a tricky one. But I can see why I can also see why the question's being asked. We've got another couple of minutes. I don't think we've had any. So one final question from me, and answer it or not as you see fit. So we have the fair tax mark. Should the government, I think it would probably have to be government, should the government be introducing an unfair tax mark to give to companies that are clearly not meeting their requirements? And maybe I'll ask that to Penny first.
That's an interesting question, and I guess they already have an unfair tax mark in relation to penalties and fines. I think the UK government needs to be considered and careful around balancing how competitive UK PLC is and attractive to businesses setting up in the UK. So I think that's sort of my view on balance is not have an unfair tax mark, but I think it's already sort of there within HMRC's operation of tax law.
Natasha?
Well, as long as they don't do it during Fair Tax Week, which is a celebration rather than a drag of those businesses not doing the right thing, then we can talk.
Okay, good. So I think we're rapidly approaching 12:45, which is our cut-off time. So I'd like to say thank you very much thank you very much to Natasha for presenting the data and for Penny for responding to it and explaining Unity Trust Bank's approach to fair taxation. I'd like to say thank you to everyone who's attended to the webinar. And as you depart, could you answer this poll that's just popped up in front of you, which is, would you like to stay up to date with the Fair Tax Foundation's activities? Yes or no? And I'd like to say thank you to the Fair Tax Foundation for all of the work that they've done and for producing the survey. So I think it's goodbye from all of us.
Thank you.
Bye.
Bye.